attending the Harvard Business School Angels Fintech panel. I'm Matt Wilson. I'm ecstatic to host you. This is another one of our oversubscribed events that we've held since this past fall, where we held a AI event, a cryptocurrency event, and also a cybersecurity event. And if there are any in the audience that have ideas for future panels, please come up to me afterwards. I'd love to hear your ideas. But before we get started, a massive thanks to Taylor Westing for hosting us in their law firm, and also to my colleagues Simon, Serena, and Janet for helping organize these events. Over the past few years, we've seen an uptick of financial technology companies emerge, and they really have two separate models. They have the model of, do we reinvent the bank as we know it, or do we provide a service to an existing bank? And some of these upstarts now, in both of the models, are starting to exert real pressures on many of the traditional retail banks. Tonight, we've assembled an amazing panel. Some of the best fintech CEOs, CIOs, and leaders of traditional banks. And it's really exciting because we have an opportunity to hear from them firsthand about their business models and the opportunities and challenges that will come from legislation such as GDPR and the Open API banking legislation. So let me introduce our moderator, Paul Rippon, co-founder and deputy CEO of Monzo Bank. Paul has led Monzo through a period of exponential growth. Less than 2 years after founding, Monzo now has over 600,000 customers, has raised over £100 million.
Would have spent that quick.
Monzo has ambitious growth and expansion plans, and I'm excited to hear more about them. A finance veteran of over 25 years of experience, Paul is a fellow of the Chartered Institute of Bankers, has experience across 8 banks and building societies, and has co-founded 2 banks. And as I learned from a Google autocomplete, Paul also is a llama and alpaca aficionado. That's one of his hobbies. Kind of fun. You type Paul Rippon space A, alpaca pops up.
Yep.
So please join me in welcoming Paul Rippon to give us a high-level overview before we begin our moderated panel.
Well, what can I say to that? Thank you very much, Matt, and welcome everybody. I hope you enjoy this evening. I'll do my best to make it as enjoyable and informative for you as possible. So at Matt's request, I'm just going to do a couple of minutes maybe to answer the question like why Monzo. We're then going to get stuck straight into the fabulous panel, and from closest to furthest away, we've got Sean, Christian, Yuelin, who's come in at a fabulous last moment, so thank you for that, and Diana also at the end. So we'll be enjoying the fantastic answers from our panel as we go through the evening. So I'll just maybe give you a couple or 3 minutes on Monzo at Matt's request, and then we'll get stuck in. So from the surface, it kind of looks like lots of money has been raised and customers have all appeared. And even some of our staff, when they join, they wonder whether they're joining the party ship Monzo, because it can feel like that to the outside world. Some of our staff, when they're going through the interview process, say, what will I learn if I come and join Monzo? And my answer to that is, if you can think of every emotion, happiness, sadness, anger, frustration, joy, like you can just go through every single one of them. Most days you get to learn what that word is all about. So it's been one hell of a roller coaster. We started in what I like to consider our first official office, just a few minutes around the corner in a place for Ask for Janice's gin bar. And in rather poetic justice, this evening is going to be concluded with gins around the corner. So life seems to close in full circles, which is quite fabulous. From my own perspective, the reason I'm at Monzo is a combination of things. First of all, I've had 25 fabulous years working for a whole range of banks and building societies and enjoyed every single one of them. But secondly, and along the way, my friends and family have kind of used me as the person if they want to buy a house, or if they think they're going to go bust, or they want to be a self-employed contractor and they don't know whether to be a sole trader or go limited company. They ask me all of these questions, and I think they ask me because, like, where the hell else do you go? Like, if you just got questions about life and how you live it and how you interact with your money, you can't go to a place that will give you all of those answers. And so part of the Monzo journey, we sometimes frame it with prepaid card and setting up a bank and current account. But actually, it's really about none of those, and it's about helping people just get through life, get through the next paycheck, and manage your money week in, week out, month in, month out, and all of the problems around your money. And that's why I'm here, because until Monzo answers all of those questions that my friends and family keep asking me, I'm not going anywhere. That's the job in hand to sort that out. So happy to chat more afterwards. What we're going to do now is I'd love for our panel to introduce themselves. You've got the cards on your seats. I'm sure you've had a look at their bios, and they're going to give us a couple of minutes each about something maybe fun or interesting. That's set them up nicely, really, hasn't it, for their intro. So we're going to have a couple of minutes from each of those, and then I'll let you know the rules of engagement for the rest of the evening. So how about we work our way along the line? And Sean, do you want to kick us off and say hello to everybody?
Sure. Hi, I'm Sean Hunter. I'm the CIO of Acorn Machine. So Acorn Machine is the fintech that's associated with Oak North Bank. Oak North Bank is another one of these so-called challenger banks in the UK, a little bit like Monzo, except unlike Monzo, Oak North doesn't focus on current accounts and so on to individuals. It focuses on lending to SMEs and their businesses, especially businesses that are in scale-up mode. So they're a little bit too big for the peer-to-peer lenders and so on, where there's been so much fintech innovation. They're wanting to borrow a little bit too much for those type of people, where you can have an automated model. But they're way too small for the big banks, the institutional desks, HSBC, debt finance team, great as they are and everything. They're not going to be interested in lending to you if you've got 2 restaurants and you want to take out a loan to finance another 2 restaurants. But the problem is that if you're in that spot and you've got a small business and you want to grow, oftentimes your last 12 months doesn't look like your forward projection, and a big bank can't afford to spend the time to actually fully understand your business. And so as a result of that, you don't get lent to in the same way that you would if you were a huge construction company or a big company. So what we try to do is take some of the customer-centric approach that the big banks have on the institutional side and apply that same mindset down to smaller lending. And in order to do that, requires a lot of innovation on the technology side to make it efficient, because obviously you can't afford to spend a ton of time if you're lending a £500,000 or so to an entrepreneur. So that's basically, Oak North Bank was founded 2 years ago doing that. In 2 years, they've grown to just over £1 billion of lending. It's about £1.2 billion. And they just announced that they made a full year profit in 2017, and they're only their 2nd year of operation, which is pretty unusual for a startup. So I'm not in the bank, I'm on the fintech side. So Acorn Machine takes the platform that we developed for Oak North Bank and licenses it to lenders outside the UK. And that's my life. So I've spent my whole life as a developer, software developer, and so on, both for software companies and for banks. I was a quant developer for 8 years. I've done all kinds of startup stuff. But the fun thing is, although I've spent my life as a software engineer, I actually have a degree in postgrad in music. So if you have any questions about jazz, contemporary, or popular music, if you want something harmonized in 5 parts in the style of Duke Ellington, I'm probably your guy.
How can you?
This is getting more and more difficult.
The bar's raising. Christian, over to you.
Well, I was gonna my bio doesn't say anything about DuCo, so I was just gonna introduce DuCo, but maybe I'll tell you a little story first, right? So, which is one of the scenarios we walked into, because DuCo solves one of the biggest problems that you probably haven't heard of, which is reconciliation of data, right? Which is a real sort of engine room problem that the entire industry faces. And the story was, we walked into one of the largest capital markets organizations on the planet, into their brokerage unit. And this is derivatives, right? So it's high value, big risk type trades. And we walked in and we were looking at how they were paying their counterparties, because if you trade with somebody, they charge you a fee for that, right? So they were doing hundreds of thousands of trades a day, and what they were doing is they were printing them out and they were hanging them on a wall. So there's like a wall with printouts hanging everywhere. And then they had a process called paint and pay, right? So they would buy highlight pens, they would highlight the things that they agreed, and the things that didn't agree, they would then take the paper down, hand it to their settlement department, and would actually pay the fees out. And the auditors totally signed that off because it was a documented process, right? So this was in 2016. And if you think that banks, just because they're large, are necessarily the most controlled organizations or asset managers or anywhere else, that's not the case. The reason it's not the case is they face a very, very difficult situation with thousands of systems and thousands of languages that these systems speak. It's very hard to deal with. So what DuCo does is it allows people to upload any type of data, it matches it, and it identifies outliers. That's it. We have banks, asset managers, fintech companies like Currency Cloud, like World First. We have on the bank side firms like Societe Generale, right? We just raised $28 million as an expansion round. So we're based here in New York, Luxembourg. We're opening in Singapore later this year. 57 people, just to give you an idea of roughly where we're at. But we're sort of the let's make it work better side of fintech rather than let's burn it all, right?
Amazing. Thank you very much indeed for that, Christian. Yuelin, welcome.
Thanks. Hi, everyone. I'm Yuelin, not Eamon, but we do work for the same company, so I'll give you a bit of introduction. OnFido, you may or may not have heard of us, but we are a B2B2C business, and our product is identity verification. So this is probably something that didn't really exist in the way you needed to exist about 10 years ago. But in the last 5 years, there's been this massive growing need, both from financial and regulated institutions, but also just companies in general who want to know who their users are, sometimes for compliance reasons, sometimes for trust reasons, and sometimes just to make the whole user experience better and more achievable without having to go into a branch or go to the post office or get notarized or so on. So we started 6 years ago, and now we are 162, spread across UK, US, Portugal, India, and we're also about to open in Singapore. So maybe Singapore is where it's at. I look at the strategy and international side of the business, which is like how do we grow our business, how do we prioritize which markets, how do we enter the market, working with regulators, working with potential partners, working with clients, and so long before all of this, actually my first job was as a acupuncturist. I'm qualified masseuse and acupuncturist and studied at Beijing University of Chinese Medicine before chucking it all in and going down to economics and finance, and in the end ending up here.
Wow, thank you, Yuelin. So alpacas, jazz player, bits of paper, acupuncture. Diana, are you ready for it? Go for it.
Okay, so I'm not sure how to compete there. I'm Diana Biggs, head of digital innovation at HSBC's Retail Bank and Wealth Management Division for UK and Europe. And I joined the bank last June to start that as a new team. The bank itself, for the UK bank, already over 90% of our touch points with consumers are through some type of device. But what the head of the digital bank there wanted to start looking at was how can we take this steps further. Technology is changing ever so more quickly. There's lots of opportunities now in the changing regulatory and market landscape, and how can we ensure that we're not just kind of at that turning point, but preparing for the bank of the future from, say, 2 to 5 to 10 years out as well. So that's what I was brought in to build a team and to focus on using those types of technologies. I joined from Anthemis Group, where I was an entrepreneur in residence, looking into the use of blockchain technology for social impact. Prior to that, I was leading the EMEA operations of a company called Uphold that were previously called BitReserve, and that was essentially a global blockchain-based or digital currency bank. prior to that, I was quite involved in the cryptocurrency and, well, it was just the cryptocurrency space back then. People didn't really call it blockchain, but more or less the same thing for several years, working with a variety of startups, investors, even larger companies that were trying to understand that technology back in the earlier days. Prior to that, co-founded a mobile technology and e-commerce company out of East Africa that's still going. But I suppose from my experience working in East Africa, and then prior to that I was living and working in West Africa in financial services and social impact, I became quite aware of the need to improve the way that money works globally, which had led to my discovery of Bitcoin and eventually moving into that world full-time in 2014. Prior to that was with Oliver Wyman Financial Services for 5 years, where I was also an Africa specialist, which had led to my desire to leave to focus on the financial inclusion aspects.
Wow, amazing. Thank you very much. Thank you to the panel for introducing themselves. So on Matt's permission, we'll scramble up the programme a little bit if that's all right. I can't remember whether I told the panel that, but they'll get on as we move through. So it's your evening. We're here at your disposal. So we've got about an hour before the bar and the drinks are open, and we have a couple of choices. Either I pose the questions to the panel, so all of the questions that I thought you should have asked me in the past when I've been on a panel, or the ones that maybe would have made me cringe, I'll ask them to get my own back. So that's the first line of questioning. The second line of questioning is if anybody out there has got something on your mind that you really want to ask, or maybe something that said makes you really happy or really angry and you want to comment and re-question again, dead easy, just pop your hand up and you'll catch my eye, and then I'll bring you into the conversation as well. So we'll do that for the next hour, and we'll wander our way through business models, data, open API, what the future's going to look like. So unless anybody chips in, that's the kind of journey that we're going to go through. Is that okay with everybody? Anybody in the wrong event need to do a quick exit before we start, or just sneak out the back and we won't say anything. So let's I'll maybe start us off with a nice easy roller, which I'll give Diana about 30 seconds notice that it's coming her way to start us off, because she was so nice to me when we met earlier. So Fintech and all this hubris and all this cash raising and all this excitement, when they've spent all their money and gone bust, I bet you'll be glad to get back to the day job, won't you?
My day job. No, actually that might make it less interesting. So part of what our team does, and actually someone on my team is specifically focused on that, is Fintech partnerships. So we were actually the first bank to work within the FCA sandbox in partnership with a Fintech in their first cohort, and we're at it again, and we have a live Fintech partnership right now with a Fintech called Bud, and our first direct brand. So with that, we're working together with them to test out the marketplace model of open banking, where we've created an app, the aim of which is to act like a concierge for not only our first direct customers, but also their friends, so that they can take advantages of some of the features like creating lists to share money towards a certain goal together with friends who might not be first direct customers. And within that, we're looking at how customers will react or what they would find useful in terms of being able to be offered products that aren't just from us or any one of the brands that we have within the UK, but also from other providers and other fintechs, for example.
Other members of the panel, come on, you must have run out of cash by now.
It's a scary question. I think building enterprise B2B is different from building B2C, right? Because we're not about acquiring a wide market and then monetizing them, which is way too scary for us. I mean, we took a growth round, which means we already had revenue that was growing fast and is growing fast. So one would hope that, for us, it's about sustaining that, right? B2B is a lot less about, we can't do another funding round and now we're dead. It's much more about, can we sustain the growth curve to the sort of rate that we need to, not to be disappointed with it, right?
Mm-hmm. Yuelin, have you got any money left?
Yes, well, we have raised a considerable amount of money, about $60 million, from a number of strategic investors such as Microsoft and Salesforce and so on. But we are also a B2B business. We charge for everything that we do. For us, it's about breaking into new verticals and new countries and kind of scaling our business. But it has always been a business that we charge for. I think also for us, like Fintech is really exciting because we sell our product through, we're a cloud-based service, we sell through an API. You hit our API, we hit you back, and that's that. And I think Fintech's definitely one of the fastest ones to move on that, just because it's a regulatory need and also their technology stack is ready to meet us there. Whereas a lot of the larger enterprises require quite a lot of business process, like kind of organization work before they can just engage with us through APIs. So for us, Fintech, the growth of Fintech has been fantastic. If Fintechs went away tomorrow, we still have a large chunk of customers who are not Fintechs or are big other financial institutions, and we'll just kind of go down different verticals. But of course, I like having Fintechs around.
Excellent, thank you very much. Sean, go on.
So we're slightly contrarian in that we're a fintech that's cash flow positive and profitable. But I think the thing with any kind of technology company is that there's no shortage of ideas. It's figuring out what are the ideas that are worth something that you can execute on at a price point that makes sense, and then separately, like, do you have a sustainable model that's actually going to work as your business grows? Because I think, a lot of people, they'll come up with, I heard a great business model the other day where someone was doing their pitch and they said, oh, it's just think Reddit, but on the blockchain. And you're like, what? How does that make any kind of sense? And like, how are you going to make money out of that idea, right? So I think, one of the things that's interesting about all the people on the panel is actually they're addressing real problems that are actually A, technologically interesting to solve, but also B, valuable to someone to have a solution to. And I think that's actually important. I mean, the reconciliation problem is a classic example. I remember I worked as a contractor in a bank once, and they used to have a person who literally had to call up the counterparty and manually confirm all the trades. And as a consequence of these confirmations, the one day our process that printed out all the things that the person was supposed to do, the printer leaked memory and died, and so they didn't get the printout with all the things they were supposed to do, so they didn't confirm some trades. And so those trades got decayed by the counterparty, and it cost millions of dollars just because this printer didn't work one day. And the thing is about financial services is anyone who's been in financial services will know that banks are rife with these kinds of things that are just crazy. And there's lots and lots of very valuable problems that you can solve. So I think fintechs that are B2B, there's no shortage of valuable targets to go after. I think B2C, it really depends on whether you've got something that's interesting that someone's prepared to pay for, like at a price point where you can actually sustain your costs and make money over the long term. It's sort of boring, but.
All right, good stuff. Don't forget, the power is in your hands. If you want to save them for my questions at any point in time, just catch my eye. Otherwise, I'm going to keep trying to wind them all up and cause a brawl on the edge of the stage. That's my plan for the evening. Sir, please do. Do we need to use the mic, by the way, for questions, or?
Yeah, sure.
Then everybody else can hear. Thank you. Thanks, Matt.
Thank you. I'd like to know your point of view because banking is very focused in money, and maybe this change is more to be more in the data and the information, more in the blockchain, because you could have value, and the value could be not be money, could be whatever. And what do you think is going to change all these services in this? Are going to keep bank data from that bank money, or where is the path for this?
Panel, who fancies that? Otherwise, I'll pick.
I mean, we completely agree that a lot of the problems are data problems, right? And they haven't been traditionally looked at as data problems. They've traditionally been looked at as sort of process problems that we fix one step at a time, right? It's like, oh, we have a problem in cash. Let's put some cash system in. Oh, we have a problem with trade confirmations. Let's build a trade confirmation system, right? Now actually, and it's somewhat played in our favor, now holistically there is a data agenda in most banks, right? There's a chief data officer, not nearly empowered enough normally, it's normally an advisory function, but the whole data agenda is driving everything. So, I mean, the second part of your question was more around probably exploiting the data, so I don't have as much to say as some of you guys might, but I think the banks have recognized that though, right? That it's now about data and being good with data. So we've positioned that way.
Yeah.
Diana, do you want to say some more?
Yeah, I think indeed we're well aware that data will be central to, I mean, it is just what's the center of all of our lives and everything that we do, and it feeds into all products, all journeys, and it's sort of the fuel of our lives, and it can help to enhance them. Our chief digital officer is chief digital and data officer, so it's really at the core of every single element of the business, and of course increasingly important. How we use that is something that has to be obviously done extremely carefully in comparison to other industries. So I think that what is sort of a strong strength, like a very key strength for a bank as opposed to some of these others, is that we're used to handling data extremely carefully, and very conscious about those aspects of it, as well as the ethical use that we're examining in terms of how we use all new technologies as well, whether that involves blockchain or artificial intelligence or not. We're examining all of those tools as they apply to specific use cases, but certainly data is at the heart of all of that.
Okay, good. Anybody else want to say anything, or should we move on? Okay, all right. Well, there was a word that was mentioned earlier. Thank you, sir, for the question. Good one. There was a word that Diana mentioned earlier, which was marketplace.
Mm-hmm.
Now, when we set up Monzo, our first name was called Focus FS Limited, because it was reminders like concentrate on the thing that matters. So that's why we called ourselves Focus. And now suddenly it's marketplace. So we're suddenly all holding hands, and like everyone wants everybody else to succeed. What's going on? Do you look after your own business first, or is it all about working with everybody, each other? What's going on, Yuelin?
So for us, actually, there's kind of two different components. So we want to be an enabler, and want to position ourselves to help the ecosystem. So our product helps you onboard users remotely up to compliance standards, so that like AML and KYC and so on. And in a world, I guess, where this is not possible at all, then of course there's a lot more friction and drop off, and it's harder to create new businesses. And so we kind of see ourselves as part of the ecosystem. We're obviously not the only people in the ecosystem, and we won't even be able to function if there were no one else in the ecosystem with us. So that's kind of one component. The second component in our world that's really interesting is this idea of federated identity. So this is related to blockchain, but not only. The idea of having one identity, which you can then use. It's portable, it's owned by you, or you can control who can access it. And this is something really exciting for us, and we're quite involved in. And again, I think if you're a market advantage, it's because people, like, if you're not bringing something of value to your customers, and your advantage just because you're there and it's very hard to get away from you and you already have everything, then I think of course that's going to be challenged. But if you are providing something that adds value, or that customers want to have your product, then making it easier to be able to access products, we think is a very good thing.
Other members of the panel want to join in?
Yeah, so I think the thing with the marketplace, I think there is a shift that's to do with the sort of change in approach from, I think a lot of early technology companies were very about, like, how do you create some kind of stickiness? How do you sort of lock your users in, so even though they hate you, they can't possibly go away because it's just too painful to kind of transition. And I think lots of enterprise software providers were like that. And that comes from a very zero-sum type of mindset where, if you're not using my database and licensing my database, then you're licensing the other guy's database. So obviously I want to steal all the other guy's customers, right? So that's the mindset. Sorry, I used my database. I'm not picking on a particular company. But that's an example of a big enterprise software thing. I think around about, sort of 99-ish, with the rise of the open source thing, and then as open source technology started to move into the big banks and become wider, there was a lot of emphasis on models that are based on sharing, and a lot of people started to create these kind of platform businesses. And somebody mentioned Salesforce, I can't remember who, but Salesforce is an example of a huge company that a big part of their success has been trying to create an ecosystem of other providers who provide solutions that are based on Salesforce's technology, right? And so this is somewhat of a virtuous circle, because obviously Salesforce gets users, which they monetize. But then those providers don't have to build everything from scratch. They can use Salesforce's technology. So, I think trying to have a value additive mindset where you're growing the pie rather than like trying to take the biggest possible slice is very helpful. And a lot of marketplace type ideas grow from that, where, hey, I might have some customers who are my customers. They might be interested in your identity service or whatever. Or the big banks, Fintech partnerships are a really good example of this. A number of banks are trying to grow like a partnership ecosystem where these small fintechs wouldn't be able to reach a very large customer base. The banks have a large customer base that is crying out for various kinds of interesting services, and so there's definitely a win-win if you can just figure out a structure where it is actually genuinely value additive and people aren't sort of cannibalizing your revenue.
Okay. Diana, come on. What do you want a marketplace for? HSBC must own about a third of the world.
I don't know if we own anything.
Detroit.
But we are in 67 countries. Certainly, the marketplace model is something that we are testing. We're also the first of the large banks to be using open banking and creating a new app, which is called Connected Money, which is just getting launched now, where you can see your balances and your information from all of your bank accounts, also at other banks. So we're certainly open to just providing whatever tools are necessary. I mean, we can look at the ecosystem of companies that people use in their daily lives, and those, for the majority now, are increasingly platform and connected companies. In fact, 2 of the core values of HSBC are being open and being connected. So it is quite a good fit, and definitely the more that we can interact with partners like fintechs, with larger players as well, I think it brings those strengths into our own offering as well. And they've also hired an open source advocate for their head of digital innovation. So it's something that I feel quite passionately about as well, and that we just incorporate in and create those types of partnerships wherever they can potentially help the customer.
Thank you. Christian?
Well, I mean, so B2B is always a bit different. I think we were talking earlier, right? We were talking about the SME segment, and when you start out as a business, it's great because you can get all this SME software. One of the great things about SME software is that it all just plugs together, right? So you get started, you buy Salesforce, it works with Xero, you turn on Zendesk for your tickets, right? It all just works. And then you sort of step up to the enterprise segments, and then suddenly it's all bad, right? And it's little islands of things, and if you want them to be integrated, then who works in system integration here? Anybody? Well, there you go. Then you call a system integrator, and they charge you hundreds of thousands of pounds to integrate the system. And so you get this like massive drop. And generally at the enterprise level, people say, we love marketplaces, and by the way, ours is the best, right? So we need to own the marketplace in order to be successful. So it's the opposite of what you say, right? It's sort of, we have to own the pie, right? We can't just have a slice of it. It's changing a bit. I mean, we actually have one bank that's rolling out DuCo Cube to 1,500 clients. And so even at the sort of the infrastructure level, there is some of that going on. But I think we have a long way to go in terms of ecosystem thinking still, right? But it's a good thing, right? There's a lot of opportunity there still.
Okay, good stuff. Thank you very much. Don't forget, if you want to, Matt, do you want to go on the fourth row back there? Thank you.
I just wanted to ask you, how do you change the mindset of your big customers who are used to perhaps putting papers on the wall? And second, how do you convince them that you, given how young and entrepreneurial your businesses are, that you're actually going to be going concern in 2 to 3 years from now, and that all this implementation cost is not going to be wasted for the client?
Well, the good thing is everybody feels really guilty about putting those papers on the wall, right? Really, right? I mean, they're kind of not supposed to be doing that, right? And then it becomes a classic thing, in my opinion, and that is all great businesses today are about ease of access, right? I mean, these guys are a great example of that, right? Like, can I get started in 24 hours and implement something and see results immediately? So we believe in that very strongly, right? Our brand promise is our 24/7 promise, right? We say you're live in 24 hours, you get results in the first 7 days. And I think that's the only way you can do that. I think re-educating people doesn't work, right? So, I mean, if you have to re-educate your customers, you lose. But if you can just dangle something in front of people, that just works. And actually, you're doing that too. I think everybody now is doing that. It's just, it's like a new restaurant. The first meal has to be incredibly good, right? And then people keep coming back. The business risk is a big thing for B2B, so we had to struggle for the first 3 years a lot because the vendor risk in engaging with a firm like us in a business critical function is bad until lots of other people have done it first. So you have a getting started problem, and you need a lot more capital than you would think to get started.
Yeah, I mean, one of the things I would add in there is that to Christian's point about re-educating people never works, is like what you've got to try and do is discover the part of the organization that's a little bit insurgent and wants to do things a bit differently. And typically that's easy because typically those are the people who reach out to you in the first place. So like I hosted a innovation day for a group of bank CIOs in Silicon Valley, and they asked me a question where they said, this company is like so innovative, how do you manage innovation? And I said, you don't really manage innovation. You just try and like encourage people to be creative, put an environment in place that will work, and allow them to be creative. Whereas at banks, I think when I work with people at a lot of banks, they're really keen to change, and they'll show you all kinds of ways in which they could change. And lots of big banks are really good at changing, actually, contrary to popular perception. But it's obviously hard because they've got a huge. You take HSBC, it's gigantic. It's like with thousands and thousands of systems, the changing everything while keeping it working is really complicated. So you've got to find cells of people who are interested. And then the vendor risk problem, frankly, if you're a vendor and you sign a contract with a big bank, if any of you have been in that spot, and I've been in that spot quite a few times, you'll find that you get beaten up with like tons and tons of clauses around like continuation of service. What happens if you go out of business? Will you like chain yourself to the desk for 9 months after your company's died so that you can like keep my systems running? You have to kind of negotiate all these kinds of things to like convince people that because they are taking a risk, and it's fair to like put yourself in their shoes. You're a tiny little fintech. Oftentimes your counterpart at a large bank is taking a significant risk personally with their career by backing you. So they might think Christian's company is fantastic or blockchain is the greatest thing ever, but when I go in and say like to my boss, hey, we should do a federated identity thing, what happens if it all goes wrong? My career personally would probably get tanked, right? And so as a fintech, I often try and think about that is like my counterpart is actually taking a career risk on my behalf. How do I make it okay for them? Because that's a big deal.
I think they say that people don't want to switch unless you're 10 times better, 8 times better, whatever the number is. And that's the kind of thing, as a B2B business, how do you make that first interaction like amazing rather than just like, oh, okay. And then the way that B2C has done this, and so we're also adopting in B2B, is by making it about you. So you get to see your results without any integration. Like you can literally within 2 minutes see your thing being processed and the results coming back. But it doesn't really matter whether it's 2 minutes or immediately or like hours or so on. But it just has to be like you can already see very quickly what the results for you could look like, rather than just PowerPoint decks or other kind of information. It's about making it really interactive. And I think the best demos I've seen as well is people who have just taken our data, processed it, under like agreements and so on, of course, but process it and giving you back, giving you back and like, this is what your things looks like, this is what you can do. And so we try to create the same experience, so almost creating a B2C style experience, but as a B2B company. Because otherwise, if they're just mildly excited, probably not going to sign.
Diana?
Yeah, I mean, I think that's fair. We obviously have a lot of fintechs approaching us, so if you can make it easy for that person in the organization, first of all, if you can find that person, you win a prize already. But then if you can make your presentation convincing, it'll be a lot easier because there'll be 15 to 20 others behind you pitching the same type of solution. So.
Okay, thank you. Now, Christian, in his answer to the last question, so I shall come back to you next, he wanted to own all of the pie, not a slice of it. Well, I got news for you, my friend. If you look at the results for the Competition and Markets Authority, they say that the big banks, depending on how you cut it, own 70, 80 or 90% of banking relationships with customers and have done for the last 20 years and continue to do so. So you might want the pie, but I'm afraid you haven't got very much of it. And I reckon you and your fellow fintechs on the panel there are creating a bunch of ideas that Diana's going to welcomely receive to improve HSBC. That's what you three are up to.
Well, I think, first of all, we're open to reasonable offers. Well, I think that affects us less, right? Because we're just not, we're not trying to take a slice of the pie, right? I mean, actually, we're trying to make sure that we're the tray underneath the pie.
Everyone following this?
I'm pushing it. That powers all of it, right? Because as I said, right? I mean, we are solving some long-standing problems in asset managers and in exchanges and in banks, but also we're signing up fintech companies because, by the time you've grown to 100, 200 people, guess what? You're going to have some of the same systems problems and the same control problems, right? And you will lose your license if you don't have controls in place. And so, yeah, I hope you're all very successful, right? And I will have my business cards ready.
Yuelin, come on, you're a pretend innovation department for HSBC. Fess up, come on.
Well, yet again, I'm pretty sure if HSBC are interested. But I think the thing you notice is that we do something that's relatively narrow. I mean, identity sounds very big, but in terms of software, but it's not being reproduced actually by the big companies. And I think this isn't just to do with identity software. This is to do with lots of different components. Like, do you buy? Do you build? Do you use something else? And for us, it's been about how do we provide this great software and this great experience, but also build these network effects in our business, because as the gentleman said at the front it's all about the data. It's all about creating network effects. It's all about making your ecosystem stronger so that anyone who uses you will not just get what they get, but also all the things that have come before, both in terms of product, but also the data. So for us, a big component is fraud. So one of the reasons people go for identity verification is because of identity theft. And so what do we get to see that a single user and ecosystem don't see? Well, we see lots more different types of fraud because we're seeing everyone's users committing fraud. We have integrations into a lot more databases that people may not want to as just one single company. This is still being debated whether we want to cache this is happening in some countries like biometrics of people who are committing these types of frauds. Do we want to remember these users? These aren't things that we're necessarily doing at this moment today, but these are things that can be considered. And so this is the whole thing about how to make your product make the whole ecosystem stronger, rather than just seeing it as one pie that doesn't grow and this narrow element of it. So we don't need to have 100% of the pie because we're making the pie bigger.
Thank you. Come on, Sean, third time of asking, admit it. Come on, you're just a part of the innovation department of a big bank.
So I think the thing is that I've always found in my life, there's, ideas are easy, right? So if if a big bank wants to take someone's idea and steal it and execute on it, I think it's easy to come up with ideas. I come up with all kinds of crazy ideas. I think, I think the hard thing is actually the execution part of almost any kind of business model. And you know, almost always, no matter how great your initial idea is, firstly, the execution part is the hard part, but also, you know, the first idea is never quite right. There's always a ton of learning that you have to do before you hit on the thing that's actually going to really work. And, you know, to take a sort of side downer for a moment, and you know, that execution part is just as hard for a big bank as it is for a small company. So in many ways it's harder because they've got inertia, internal complexity, politics, all kinds of organizational problems that make it hard for big organizations to be nimble. On the flip side, if you take you say the big banks have 70–80% of the market, you know, everything's becoming a data problem. So, you know, the big banks have exponentially more data than anyone else. So if most of the value is trending to be in various types of data, while these large companies have gigantic amounts of data. And so, you know, if you're really thinking about how to, you know, make a business that's going to work well in that environment, because that data inequality problem is just going to increase, right? Data size is exponentially increasing. The sort of people who have the monopoly on data are going to have even more data, so the size of that moat is just going to widen over time. Stands to reason. So if you're thinking about how to like make a business that's going to be successful in that environment, I would say, you know, the guys in the gold rush who made the money were the guys who made the spades, right? So like, it's a similar type of thing. If you're helping these large organizations make sense of their data, then you might well have a business model that works well. So, you know, one of the things that we try to do as Acorn Machine is help these big banks use their data to better lend to SMEs in the segment that we really, really know about, which they all acknowledge they find hard to do. And so we have it's not like lending to SMEs is that, you know, like non-obvious an idea. Everyone wants to do it. It's just that it's actually quite hard to do. So you know, they've got the data. We've got the expertise on how to use that data to make the lending situation work. And so you can kind of like, you can make it work that way. But I think if you think that, you know, somehow you're going to make an HSBC from scratch today, it's highly unlikely. You know, they've got tens of millions of customers. They've got a massive, massive head start.
Very good. Come on, Diana, let us know what's going on. 4 banks started the day and 4 banks will end it, won't they? That's the way it will be.
I mean, I can't predict what would happen in the future, but I can certainly internally encourage people to not be comfortable. And I suppose that's one of the reasons that I'm there, is to ensure that we aren't complacent, and that, just like I would encourage any business to do, that we're constantly on sort of day one thinking of how do we create like a business that will be sustainable for the long run, rather than saying things are going fine. So there's a broad number of elements that we cover in doing that. One of them that's covered by my team, we have quite a few people looking at the culture of the organization. How are we structured internally? What kind of training do people have access to? What kind of talent are we hiring in the organization? Do we, even just being such a massive organization, even know what we are already doing? How do people who are working in innovation or have these kinds of ideas, how are they able to share them throughout the organization and ensure that these people who are very deep experts in their products, in their businesses, also have the capacity and the ability to move that into the future and not be hindered by any of the current processes or structures, and that are incentivized to actually continue to grow the business and not sort of as a knock-on effect of the financial crisis, incentivized to sort of just protect and be careful. So we are looking to stimulate that type of thinking throughout the organization. We are also looking at some of what isn't necessarily innovation, but just those core capabilities that we would need today to be able to do the types of testing and learning that we need to understand what are the needs that people want. How do we co-create with customers, for example? So building tools within our mobile apps and building communities together with customers that allow them to share what types of services that they're looking for, as well as create the technical environments to enable that type of innovation. So the sandbox environments where we can do that kind of quick testing and learning, and avoid all of the processes which are just part of being a global and regulated corporation. And then also the third element is actually looking into the future, so understanding from bringing in people from external fields, working in partnerships with those types of companies to think about, okay, these are the potential business models of the future, and how do we start designing those in a way that works for us.
Okay, great, thank you. Well, I hope everybody's making as many notes as I am. I've got loads of answers for future questions that I get asked, but don't forget, yep, do you want to join in? Matt, do you want to hand the microphone? Thank you.
Yeah, we've had a really good, interesting discussion, certainly from my perspective so far, and data has come up quite a bit. Obviously very interested in your views on GDPR. Obviously it's game changing in terms of what data can be used for, how long it can be held, and so on and so forth. So I suppose interested in your views on the impact of GDPR and also how it's going to affect your business models.
Nice one. Well, bonus points for the first acronyms of the evening. Well done. I got a list of them. You got the first one. So bonus points for anybody that can actually say what GDPR is all about, and then answer the gentleman's question.
Well, I can start and have a go. So firstly, I would strongly encourage anyone who wants to understand this to actually read GDPR itself rather than lots of the advice on the internet about GDPR, because the regulation itself is not super long and it's actually relatively easy to understand. As an individual, I'm not a lawyer by background. It's pretty legible and it's, you know, it's relatively tractable for a normal person. I think one of the things, if you look on the internet about, you know, advice about GDPR, there are a lot of people who seem to have vested interest in creating confusion or sowing all kinds of, you know, like, because I read an article which said like, oh, you know, business cards are going to become illegal under GDPR. And I was like, that's completely insane. Like, the GDPR enshrines the principle of clear consent. So if someone gives you their contact details on a business card, it's clear consent to have those details. Now, I probably can't go and give those details to Matt if they didn't consent. And that's reasonable. As a person, I like the idea that people will be constrained what they can do with my personal data. And, you know, I was recently like slightly freaked out by one of the social networking sites suggesting a connection to me with a person that is not in any electronic form that I have connected to me. However, he is the husband of the person who used to rent a house that I used to live in. So he's the husband of my old landlord, and you think, hang on a second, that's slightly creepy that you've kind of connected this person to me in some way. So you know, I think as an individual, I'm quite heartened by the idea that there will be some constraint around data. I think for lots of legitimate non-marketing uses, I'm not saying marketing is illegitimate, I'm saying legitimate uses aside from all of marketing, GDPR actually doesn't affect lots of data analysis, because a lot of data analysis, for example, the vast majority of what we do actually doesn't require any kind of personal identifiable information or any kind of sensitive information of any kind. And so we can do most of our analysis without any of that. Obviously, when it comes to lending, there is an element of character. So, you know, if you want to find out, is Sean Hunter, you know, ever been associated with a business that's gone bust or something like that, you know, that's actually a legitimate thing to find out if I'm asking you for a loan, or at least I think it's legitimate. I haven't, by the way. So, but like, but so GDPR, I think there are lots of, it remains to be seen how the case law pans out once the regulation actually comes into force and people start to actually litigate around these ideas. But I mean, it just so happens we're actually in the offices of one of the best data privacy law firms in Europe. And I'm not getting paid for that. I actually, in my previous Fintech, we actually engaged Taylor Westing to deal with some very complex questions around data and so on. And they're very, very knowledgeable. So there's that. But yeah, I mean, I think it's one of those things where certain practices that probably should never have gone on are going to be curbed. Certain things are complicated to get done, and they need to be thought through carefully. I mean, the whole question around retention, what is appropriate retention? I mean, like a classic example of this is, and this is really basic, is I interview people all the time, and I have done for you know, ever. I'm ancient. So, so and like I oftentimes will look back on old interviews to sort of calibrate. So if I ask a question, a particular type of question, I'll look back on my old interview notes to say like, how good of an answer do I sort of expect to this question? Because I think it's important to like to make sure that you're keeping the bar sort of consistent for people. However, like probably I can't just randomly keep 10-year-old interview notes around anymore with people's CVs, and probably that's a good thing. You know, people's careers change and they learn things over time. So but like there are things that need to be thought through. But for the most part, I think GDPR is a fantastically good thing.
Mm-hmm. Great. Yuelin, is GDPR and data keeping you awake at night?
So I guess there's two perspectives. As an individual as well, I mean, I think the idea of having more control over your data and more visibility and what data is being shared, especially personal data, I don't think that's necessarily a bad thing, and definitely will root out hopefully some of the practices that are going on. For OnFido, I mean, all of the data we deal with is PII, and it is a core part of our strategy, and has been now probably since middle of last year. It's been top company priority in pretty much everything we do. If you look at our company objectives, we use OKRs, it's privacy and security, growth, I mean, which is pretty brilliant. And actually there's been loads of initiatives internally as well to get us more learned about what GDPR is, what are the best practices in security. This is actually a company-wide initiative, and we've created lots of different kind of learning and testing tools and so on about it, and I actually have been finding it really interesting. Also in my role, because I look at international markets, a lot of what we are considering quite new in GDPR isn't that new in a lot of countries, especially across Europe. There's been, especially in countries like France and Germany, there's already been a lot of laws about this way before GDPR, and so it's going to have to be a core part of our company, both in the UK but also just abroad, and I don't think it's a bad thing. We've invested very heavily in it, both internally in terms of the people we've brought in, and also externally as well with the external counsel, and we kind of see it, this is what we want to get to be able to do business, and so it's a core part of our strategy.
Mm-hmm. Great, thank you. Diana, anything to add?
No, I think it's just that data privacy has obviously always been at the heart of everything, and that hopefully GDPR also represents an opportunity to provide more transparency around some of automated decision making that we see on the market.
Great. We have about 15 minutes to go, everybody, so I know you'll be getting thirsty for the gin. Question at the back, the lady in green there. Thank you.
So another big attached on blockchain, so I'm interested to find out if this is a technology that you thought about using, if so, why or why not?
Who wants to go first?
Sure. Yeah, so we've been actively working and exploring the use cases for this technology. For the past few years, we were one of the first banks to join R3, so in looking at distributed ledger, particularly designed for the financial services industry. And also we are part of the utility settlement coin pilot that's happening with the Bank of England. So exploring those out, some of those use cases moving towards production, that's less in the retail banking space, I would personally say, and more in the global markets and trade finance space.
For us, there's been kind of two aspects. So one is since cryptocurrencies, more than blockchains, as becoming increasingly regulated, or at least companies are choosing to become regulated, they've naturally started falling into our client sphere. So we work with a lot of exchanges, like money wallets and so on. So we're kind of naturally quite involved in that space. But for us as a business as well, it's something that we're looking at, and hopefully there's some big new initiatives coming out regarding decentralized identity and management and so on. So it's not something that's currently falling under my remit. We have a different team working on it, but we are definitely looking into it.
Great. Christian, how's your Ethereum holdings going? Other currencies are available?
Well, we're actively staying away from anything to do with blockchain, right? In two important aspects. So first of all, from a business point of view, we would always stay away from anything that requires a consortium of banks to agree on something, right? Because we need to make money, right? And I've sort of been there, because I actually started out by working with ISDA on standardization of derivatives trades, and oh man, it's painful, right? That's not a recipe for success, right? Like say a firm like DuCo joining R3, I mean, you might as well give up, right? So that's just not a good way to go to market. But I think more importantly, and a bit less flippant, I suppose, right? I think there are certain processes that are better solved by blockchain than by reconciliation, which is what we do. So if I look at the global Nostro account setup and cash movements in particular, right? We're not spending our money in that space because that space should go away, right? And so therefore we are actually concentrating on the complex processes where we think there's no chance that they end up in the blockchain anytime soon, like the capital markets areas, right?
Great, okay. Got about 15 minutes left. I mean, we've got a fabulous panel here, so we don't restrict yourself to the conversations. Like they've also said they'll take questions on deep sea diving and other subject matters that you want to raise. Gentleman on the third row back there.
I have a loud voice, so.
Excellent.
Open banking was mentioned at the beginning. Can you talk about what that actually means for us and what the security implications of that is?
Is that as the consumer or as just like generally?
For the consumer, what does that actually mean for us?
Excellent. Open banking. Help us decipher it. What the hell is it about?
So, as I understand PSD2 and open banking, the sort of the animus behind it is, or the sort of concept is, to provide the ability for people to opt in to sharing their bank information with other companies. So, as an example, Oak North Bank, the bank that I'm the sibling company of the Fintech that I'm associated with, lends to SMEs and entrepreneurs for their businesses. Now, one of the things that's really painful is for all kinds of businesses is any sort of monitoring or proving that you're meeting your bank covenants. So typically, like, if you have a bank loan, you'll have a covenant that says your maximum leverage level is X. You know, you're not allowed to do a certain amount of whatever it is. So you have certain financial covenants. Now, in order to do that monitoring at the moment, most banks, the monitoring situation is pretty patchy. So they'll very, very intensively monitor businesses that they're worried about. A lot of other businesses they won't do anything with. But for the people who are under monitoring, they're constantly having to produce reports and things like that to their banks to prove that they're not doing anything bad. So the idea behind open banking, or the sort of promise of open banking, is in a world of open banking, ideally, my bank would connect automatically to the bank that I'm having the loan with, and that bank would be able to request all the information so they can monitor the covenant without me having to constantly produce reports for them and so on. Now, obviously, there are certain things. You mentioned security. There's security implications to this, because obviously certain things I don't want shared with all the banks. You only want to share the information that's necessary for the monitoring of the loan. You don't want to see all the transaction information. Likewise, you know, if you have a connection with somebody's accounting system, they might not want to share all their accounting information. They might only want to share the relevant management information. So there are things to think about around there. But the idea is that essentially it's standardizing on a certain set of protocols so that banks can share information where customers give them permission for the benefit of those customers. That's the concept.
Great. Diana, come on, help us out. Open banking. Why would you want to opt in? You want to keep your account and all your data with HSBC? Surely that's the recommendation to the audience.
Yeah. Well, in the UK, it's the Competition and Markets Authority that's instigating open banking, and as mentioned, so customer consent is at the heart of that. So that's really about providing you with the ability to share your transaction information as well as to initiate payments, provided that you give the consent to that provider of choice to share that data, and it allows for regulated and authorized third parties to be able to have access to your current account data and to your payments initiation if they are authorized by the FCA essentially. So two examples of how we're using it, and really the focus is around, the idea is to make customers' lives easier, and to have less power controlled by just certain large banks, and to sort of open up information as the consumer would like to open it. So one example would be in our Connected Money app, where you see your various current accounts at all of your banks. Like, so you might have some accounts with Barclays, some with HSBC. You can see those all in one place. You can also see in that particular app your credit card information. So then when I open that app and I see my screen, I can see how much money I actually have. So I can see all of the data that's in my accounts, but it will also know that this amount is owed to whatever credit cards, and there I have a much more holistic picture of my finances, and the types of insights that you can derive from that would be of all of your different accounts, which may not all be with the same provider. Another example would be, say I would like to have a loan from HSBC, but some of the money that I have coming in is actually from another bank, or my history of transactions is with another bank. So what we're doing is pulling in with the customer's consent, saying, we're evaluating you for a loan. Do you have other accounts that might have more financial information that you would like to share in order to help strengthen that decision? And then being able to see that, you might have more chance of getting that loan, and that's something that you can simply pull in automatically through APIs.
Can I just ask, I mean, it sounds great in theory, but is the technology really strong enough in terms of protection? I mean, when we have Equifax, a huge company, have 150 million people's data records stolen. Are we really ready for this yet? Mm-hmm. Is the question I would have.
Yeah.
It's great in theory, but it just seems to me that it's an open recipe for disaster.
So, I mean, it's a really valid point. I mean, if you think about it, Equifax, their entire business model is around this particular data, and they managed to lose their entire data asset, all this private data. And as a small fintech, one of the things that we do is we're working with banks, and we're entrusted with their data to a certain extent. Obviously, they don't just give it to us; we process it in the controlled environment for them. But and if that data was to be lost, it would be an irreparable loss to the customer. Because one of the things about privacy is, it's like, if your private data is stolen, that's a loss you can never recover from, right? It's an irrevocable private key that you've given away, essentially. And so I think that the people oftentimes don't take the responsibility seriously enough.
Yuelin,
secure authentication is part of that, which is in this open banking implementation body that the CMA has. So that's at the heart of it. Banks will, of course, you can choose whether or not you want to share. So that's your choice, depending on your own view of whatever third party. Banks will still be subject to all the rules and regulations and data privacy laws that they are as well. So there's that, and then there's also GDPR, which means that data can be housed for only 3 months, and again, you need to request consent. So.
Great, we've got about another 5 minutes left, sir, and then we'll come on to the back row next. Thank you. Maybe if we just have a couple of responses, because I can see there's 3 or 4 questions building, so we'll just restrict to a couple of answers, please.
I think one of the biggest disruptions I see around the world is in China, where you have non-banking players such as Tencent and Alibaba totally disrupting, especially the retail marketing space, creating an advantage for themselves. In Tencent's case, they own WeChat. Just curious how this is about disruption, how the panel sees potential platform disruptions like that in our world.
Mm-hmm. Very good. Yuelin?
That's a really good question. So one thing about the Chinese disruptors, it's not, partially it's fintech, partially it's AI, and partially it's like kind of centralized support for what they're doing. Is that though a lot of those companies are still very welded to the internal market, or at least serving, in their cases, Chinese people abroad. And when they have chosen to go to external markets, it's usually been through acquisition. not even partnership, like actually acquisitions. And so it's not been like that kind of centralization of all of these different components fully supported by the government. It hasn't been so like obvious in other countries. I mean, you can say there's a couple of big platforms. Facebook is, I suppose, 4 of the top 10 apps in the world. But even they haven't gone full on into payments and bookings and like into, like everything else that's possible. And I don't know if it is going to be possible now to be able to do all of these different components. I mean, people say maybe Amazon, maybe Google. I don't know. It's so hard to call what will happen there.
Great, thank you. Sean, quickly.
Yeah, so interesting stat. Alibaba grows by an Amazon every year. Just think about that for a second. If you've not used WeChat, it's completely incredible the kind of thing you can do on WeChat. I mean, you can. It's a chat app, but any kind of market. There's a huge marketplace of providers who can monetize their services on WeChat. So you can send a WeChat message and get a manicurist sent to your door who will do manicures for you. And there's all kinds of crazy services. Because if you've got some idea, they'll handle all the logistics for you and the payment side and everything, and all your customers can just contact you by chat. It's totally fantastic. So the innovation is amazing, and the potential for disruption is huge. From a data perspective, it's really interesting because I think, and financial as an example, they have a huge amount of merchant data. So now they're moving into financial services in terms of lending. They have all this data that they can use to make really incredible decisions. Whereas if you look at the low end of lending in the West, it's primarily sort of bureau data plus not very much else. So they're going to Equifax and everyone's using the same types of data. So I think it's very, very interesting how that's going to play out.
Fantastic, thank you. And there's a couple of questions wanted to be asked at the back there. Matt's already there. Amazing. That was fantastic the way you appeared.
Hi, just maybe more curious question. From your unbiased view, the valuations surrounding the various fintech companies causing disruption, are they over generous and due a correction?
Well, maybe we should give some diplomatic answers to that, right? I mean, so valuations are high. Different with B2B and B2C. I think that's always worth repeating, right? Because B2B valuations tend to be multiples of revenue. And nowadays, you don't get high valuations just like that. You need to have a high growth rate, you need to have a low churn rate, and you need to have a large market. And we're not in .com land here. I think that's something that's worth remembering, right? That we're not sitting here coming up with crazy ideas that might never make money. It is actually underpinned by revenue and solid customer growth, right? On the B2B side, at least there are some fundamentals under these valuations. They are still high. It's probably going to change in the next 18 months, in my opinion.
But you're seeing this, like, it's not just fintech, right? Like, tech, NASDAQ valuations are very high. There's still so much, what do we call it? Like VC money that's not been spent in the US, asset allocation.
So I think the median IPO valuation for SaaS in the last few years was 8 to 13 times revenue, right? Which for IPO, I mean, those are sizable companies. That's very high, right? And some of those are loss-making companies at IPO getting these valuations. So I don't know, because when you look at the companies that actually got those, like Atlassian, right? Companies like that, those are solid companies. So it's probably more of a concentration of quality into a small number of really good companies going on, right?
Great. There you go. So I hope that helps with your pension planning. Last question of the evening. There was a lady just two along from there. You put your hand up.
It was actually the
Oh, that was already covered. Right. Go on then. Bonus one, and then I'll let one or two of the panel. Was it? Last one.
All this machine learning AI, how far, and there have been recent patents that have filed in the US about banks that will be humanless. How far are we from any of that?
Yeah, very far. So, and it's really someone like as a nerd who's been interested in this field for a very long time. So I remember a time when everyone said that neural networks were dead, that there's absolutely no point in having more than one layer of neurons in a network, which, if you know anything about the whole field, is all about deep learning, which is very like lots of layers in the network now. So that there's a long way to go in the research side of the field. But I mean, if you take most applications of AI, I think, you know, getting AI to do even really, really basic things, like if you've got a PDF of the financials of a bank, for example, and you want to find all the tables and strip those out. And there's an open source package, it's fantastic, it's way better than typing them, but it still makes tons and tons and tons and tons and tons of mistakes. So, you know, and that's produced by very, very, very respected AI researchers, you know, backed by open source, kind of like everyone collaborating, etc. So the thing that's interesting, I think, in AI and the democratization of it has been a lot to do with, you know, a lot of the important stuff has all been made open source, so you can download scikit-learn, etc., and you can just run all the XGBoost and all the kind of latest algorithms and all that stuff for yourself and try them out. So it's very easy for people to get into the field. I think the hard part around any kind of AI is getting intuition around what are the right approaches to apply to a particular type of problem. And then the even harder part is how to make it do something in the real world that is actually very trivial for a human being most of the time. So where AI has beaten humans, like Go, AI beating humans at Go is a really big deal. I'm a terrible Go player, but I know how to play Go, and it's an amazing achievement. But it's a very, very narrow field. Go only has about 6 rules. So it's an incredibly complicated game, but it only has a very, very simple rule set. So its computational complexity is very high. So it's a huge achievement that they managed to conquer the game. But it's still relatively simple compared to, you know, say recognizing faces or doing all the things that human beings find very easy.
Yeah, but I got claim to fame. I wrote my undergraduate project on using neural networks to solve Go problems, and it failed miserably. It failed miserably. But I'm actually not even a fan of using the word AI at all. I think solving point problems intelligently using machine learning is and improving the user experience is much more interesting than trying to solve all problems using some sort of general intelligence, and that's happening, you know, all over the place. I think a lot of us are doing that, right?
Great. Okay, I'm conscious of time. I can see Matt's giving me the evil eye. Do you want to come up and say a few closing words, Matt?
No, really, nothing else other than thank you everybody for attending, and feel free to join us for drinks and small bites next door.
Thank you, everybody.
Thank you.